Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Patrick Francey. Patrick is the CEO of the Real Estate Investor Network and a multi-business owner. Patrick brings over 40 years of expertise guiding individuals toward their financial and business goals. Thanks for joining us, Patrick. Can you start by telling the listeners a little bit more about yourself and what you do?
Well, happy to be on the show. Well, I guess my bio really does sum it up. I am a multiple business owner, and one of my businesses, which I've had for just over 40 years, we just celebrated our 40th anniversary, actually. The Real Estate Investment Network, or REIN Canada, has been around 30 plus years, where we've been teaching real estate investors how to invest in real estate, step-by-step process, how to grow a portfolio and create the financial future that so many desire to have, and use real estate as a vehicle to achieve that.
Congrats on your 40th anniversary.
Yeah, it's been great. And I'm also the host of my own podcast, The Everyday Millionaire, which I'm into my 8th season. And we have a lot of fun doing that as well.
Nice. So you're based in Canada. What are some of the differences between investing in the US and Canada?
Well, I think there's a few things that have to be considered. One of the things, of course, is that real estate population, the geographic size of, demographic size of U.S. is far bigger than Canada. I mean, we're talking about 39 million people in Canada versus, 390 million in the U.S. So when we look at real estate, we always look at it from a regional perspective. Of course, there's no such thing as a national average. There's no national real estate. There's regional real estate. So that's where we are the same. Now, within the context of how do we transact real estate, there certainly is different ways of transacting in the U.S. versus Canada. That's even broken down by the state versus the province in Canada. So lots of nuances in there. But at the end of the day, from an investment point of view, when we're buying real estate, there's a couple things that we want to look at is what is our strategy? What is our exit strategy? What is it we're buying for? And what's the intention? So are you buying for cash flow today? So are you buying for income today, as in you've got a working business and you're doing a fix and flip, you're doing a renovation of some sort, you're doing a rent to own, something that's putting cash in your jeans? Or are you buying and investing for future income, which is, the traditional buy and hold, buy for cash flow, and, buy down mortgage appreciation and all of those things. So in terms of real estate in Canada versus the US, there are many nuances in terms of writing offers, closing deals, how you transact real estate in the US. But when we look at how we transact in Canada, different than the US, yes. But something that we always consider is that when we look at us as investors, what are we trying to do? We're looking to where real estate is going in the future, not where it is today. Less concerned about where it's been in the past. We often look at historical, but really it's kind of meaningless. We want to look at the economic data that says, where is real estate going in the future? So we want to know what GDP is. We want to know what population growth is. We want to understand what's driving an economy, what's job growth, because of course people move into regions where there are jobs. So a long answer to your short question, but ultimately as much as there's a lot of differences in real estate and how we transact it, in terms of why we buy and where we buy, we look at the economic fundamentals, and we'll do that in Canada or the US, doesn't really matter.
Absolutely. That makes a lot of sense. And I think what's super important, what you said, is where it's going. And I think certainly when I was starting out, and I know a lot of other people do it, we looked at what the previous owner bought it for. And if they were like doubling or even tripling their money, I'm like, well, I'm not going to pay that price. It's ridiculous. And it took me a while to get over that hump. And it's like, it doesn't really matter how much they made. It's like, how much can I make on this property,
Exactly. Well, that's the thing. And when we look at, and what we've taught for over 30 years, is understanding the economic fundamentals that affect the long-term real estate cycle, and also the shorter term, the influencers, what we call influencers. Like right now, both Canada and US are facing some political influencers because there's transitions, there's a real dislike for our current leaders and their policies, and a lot of the things that are happening in that regard. Those are more influencers, and it's not that they don't have an impact, but they don't have as long a term effect generally. Now, having said that, when we look at the economic fundamentals, if I'm moving into or looking at a region to invest in, we often will choose the bigger or more popular cities and states to look at. But when for example, you look at Florida, everybody wants to move to Florida. Well, Florida's not a huge state, but there's a lot of nuances and parts of Florida. And you go, okay, well, where in Florida and what's going on in Florida? So if I'm an investor, I'm looking into the future. I want to know that I'm going to get appreciation. I want to know that my cash flow is going to be steady, which means, is there a steady flow of renters coming into that region as well? Because if I'm a rental housing provider / landlord, I want to know that if I'm treating my real estate investing like a business, and like any business, what do I want to know? That I've got a consistent lineup of customers / tenants that are going to want to rent my property. Well, as you know, there's lots of cities in the US, as there are in Canada, where you don't have lineups of people moving into that city, that town, for all sorts of reasons. Mostly, there's not enough jobs. It's too expensive. Lifestyle isn't what they can afford or what they want. So when we consider how we invest in real estate, when we look at the economic fundamentals, we look at GDP, or the economic health of a region. And when you have positive GDP numbers, then you're going to have population growth because people are moving there for the jobs. And if you have people who are working and the long-term prospects of those people working are strong, then of course that plays positive to the real estate market, because as people move into that region, you get increased rental demand, because generally people move into a region, they don't always buy right away. They don't know about their job. They don't know about their credit rating. They don't know where they want to live. So they rent. Cool. Ultimately, in about an 18-month to two-year period, those renters often shift and want to be home owners. And so then we start to see the pressure on buying real estate go up. And of course, when you have demand and supply and the imbalance, we see prices go up. So it's kind of a very high level is what I'm giving you here, but there is a system, there is a process to investing in real estate that many just step over. They're busy listening to their realtor, maybe their brother-in-law or sister-in-law, or the guy at work goes, no, you gotta, it's hot, go buy, you'll make money. It's deeper than that.
Yeah. I think people get two things that happen: either analysis by paralysis, or it's the it's the squirrel factor. Everything looks, squirrel. Like,
Yeah.
there's just so many opportunities in real estate where they become overloaded, and they really, especially when you're beginning, just start small, pick a market, pick an asset class, and focus on that. Become really good at that, and then later you can expand on that. But if you got a toe dipped in so many different real estate ideas, then you're never gonna be really good at it, and you might not even invest. So focus.
Well, that's such a great point, Gary. And the key is to focus, but to decide on what your strategy is going in goes back to what I said earlier. Why are you investing in real estate? Are you investing in real estate for income today? Okay, well, that's a totally different strategy than if you're investing for future income because you are looking that, okay, I want to secure my retirement or some future state, then that's a totally different strategy. And to your point, it takes focus. And I always say, often over the years, like I've literally worked with, over 200,000 real estate investors over this past 30 years. And there's a fundamental, which is that there is no bad time to invest in real estate. Now, that may sound ridiculous, but there is no bad time to invest in real estate. There is just the wrong strategy given what's going on in the real estate market and the real estate cycle. There are times where fix and flip, everybody's hitting it out of the park. You're going to renovate, you're just turning those deals and you're churn and burn, and it's awesome. And then there are times where, holy cow, it was all working and then all of a sudden it stopped working. Well, what happened? Well, the real estate cycle changed. So once you know why you're investing, what it is that you're working backwards from, like I say, income today or future state, then you start to choose your strategy. To your point, you get focused on that strategy. You learn everything you can about that strategy. You surround yourself with the right team of people to execute, and then you move forward and not be chasing all the shiny things that show up. And that's often, to your point, where people get into trouble because they're not focused.
So what got you into real estate in the beginning? Was it a book, a person, a mentor?
I think there's a number of things. I could go into, there was a book in Canada, I think he went into the US too, that I read a long time ago, many, many years ago, called The Wealthy Barber. And that started to shift my mindset. Then the classic case I read Robert Kiyosaki's book, Rich Dad, Poor Dad. That was early on. And then I was in my business. I had an operating business, the one that I have owned for 40 years. And I was probably 40 years old at the time when I was kind of getting to this place where I was starting to really create relationship with other business owners. And what I noticed about those business owners, Gary, was that as successful as they were, and some of them were uber successful, I mean, tens of millions, hundreds of millions of dollars of revenue in their business, without exception, they all invested in real estate. And I said, well, if I'm going to model myself after those that I admire, I want to look at this real estate thing. So then I started to have conversations. And a good friend of mine once said to me, he said, Patrick, you've got a great little business here, pays you well, you're cash flowing, you're doing all the things right, you're exiting the business, you're going to own the asset called your business. But at some point in your life, you're going to want to sell, but you don't know that it's going to sell for what you want it for. You don't know what your future is. You don't have a government pension. So you start to plan for that future called retirement, whatever that is. I'm now 66 years old and I'm going, who the hell would retire at 66 years old? I'm on the Freedom 95 plan. I love what I do. I would never think about retiring. But back then I'm thinking about, okay, well, what if I wanted to, I guess, and I realized that real estate was a way for me to create a financial future. So like so many of my entrepreneurial accidents over the years, I got into real estate. I came across the real estate investment network. And, at the end of the day, I liked it so much. I bought the business from the owner who was a good friend of mine. And then ultimately I went on to be a coach and a speaker and a support of those who want to create financial futures investing in real estate.
Excellent. What has been one of your biggest lessons or something that you've had to overcome in your real estate business in the last year or two?
Oh gosh, so many things given the pandemic and the lockdowns and all the stuff that went on. I had multiple locations in the store, the retail business that I own in Canada here in Alberta. And so I had to close down a location. I'm now facing the fact that, real estate in Canada, like some parts of the US, is totally out of favor, if you will. And real estate investors are pulling back. Our biggest market in Toronto is getting hammered, in the condo market. So it's a very uncertain time. So investors pull back, they kind of go into hibernation, they go into hiding. But I think one of the biggest lessons I've learned in the real estate world and the business world is that never compromise your values. And I have I guess unknowingly, without realizing, is that a couple of partners and really good guys, and I was partners with them for a number of years, but we didn't really share common values. And then ultimately, partnerships and deals, joint venture partners in the world of real estate rarely go sideways in the first year or two of business. It's not that they don't, but real estate's the long-term game. So as things change and environments and people and lives change, it can get a little sideways. So I had a couple of expensive lessons over the years with that. And because I exited in the past couple of years, I had to take a couple of hits, and all good. I mean, it was ultimately it. But back to your question, what are my lessons? Choose your partners in alignment with their values. In other words, don't put money and the deal ahead of the relationship in terms of your relationship with who you are. Stay in integrity and be okay to walk away from the deal. There'll always be another deal, always be another partner. And so that's really it. And I compromised my own values, sadly, without realizing it. So it was a big lesson learned. So I share that with your listeners because I wish I would have had a me a few years ago.
Well, that's great advice, and very, very, very important for people to understand. Real estate is a long game, and so choose wisely. Like you
Well,
said,
there's a story. It's interesting, Gary. There's a 50% chance when people get married. I think it's more than that now statistically. There's a 50% chance that when you get married, you're going to end up divorced. That's just by the stats and the data. So when you're choosing a real estate joint venture partner, for example, realize that you may be with your joint venture partner longer than you are with your marriage partner. So that just kind of gives you some, scope of, holy cow, real estate is often a long-term game. So you want to make sure if you've got a capital partner, a working partner, that, gets deep, it gets complicated very quickly. So just caution.
Yeah, and you're leading two separate lives. Their lives may change, and so then everything
Certainly.
changes on that deal. And if you guys aren't aligned, then you could have to sell when you don't really want to sell, or many other things. So absolutely, really, really important to be aligned, not just from an investment standpoint, but values, integrity. Absolutely.
Yeah.
So, what are you looking forward to the most in real estate in the next few years? Is it a particular asset class, rates coming down? Like, what's your plan or hope to be for the next couple of years?
Well, I'm kind of unique in a couple different ways. Number one, at this point in my life, I'm not really acquiring assets in terms of real estate assets because I've got a portfolio that I'm very happy with. So right now, it's about managing my own portfolio. Having said that, in the business of the Real Estate Investment Network and supporting real estate investors, and that's not to say I won't do deals. I'll just be very choosy. I'm also more of a capital partner these days than I am an in the trenches kind of guy. But having said that, both my wife and I agree that if the right deal shows up, we would be very, very interested in it. Having said that, what am I looking forward to? The reality of this kind of global macro economic conditions that we're all facing, the headwinds that we're facing right now with higher interest rates and just messed up politics all over the place. What's happening with money printing. And I mean, it's just really crazy. But in amongst all the chaos, and this is what's so interesting, when the cycle is booming, as it was a couple of years ago, everybody's a real estate genius, aren't they? Everybody seems to be making money, at least on paper. And they're all real estate geniuses. Everybody knows how to do it, and they're doing it. And everybody, including the guy driving the cab or working 7-Eleven, seems to be able to pull off a deal. Here's the thing. When the real estate cycle turns, like it is right now, where we get into the beginning of a slump cycle in many regions across both the US and Canada, it's where people go away. They get freaked out. Yet the savvy investor understand that in the chaos, in the slump cycle, that is where opportunities exist. So for those who take the time, have a little bit of patience, get the education they need, listen to podcasts like this, for example, where you can actually start to understand one fundamental thing: become a problem solver. So if you have an education on strategies and tactics, if you take the time to learn, you are going to see a lot of problems start to surface. It'll be friends at work. It'll be friends of friends. It'll be your friends saying about your neighbor. It'll be your workmate talking about their uncle. It'll be something that says, oh gosh, do you see what's happening to this situation or that situation? And when your ears are up, when your radar is up and you have an understanding, come in to solve the problem. It's not to say that you're in to take advantage of anybody. It's to say that people have problems that they have no idea how to solve. So if you can be a solution to somebody's problem, that's where opportunities in real estate exist. And I can't stress enough, when there's a boom cycle, everybody's winning until the music stops and there's no chairs to sit on anymore. In these kind of slump cycles that we're now into, and depending on what region you're in, we're well into, it's where opportunities start to show up. And if you remain savvy, if you remain educated, man, oh man, you can really take advantage of a market like this.
Absolutely. Absolutely. Well, Patrick, thank you so much for coming on the show and sharing your expertise. Where can listeners find out more about you and your company?
Well, you can go to REIN Canada, REIN Canada.com. You can follow me at P Francey on Instagram or Twitter. And the everydaymillionaire.ca podcast, the everydaymillionaire.ca podcast. If you like to listen to that stuff, we're not just about real estate. We're about a lot of things, but that's where the best place to look for me is.
Awesome. Well, this is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.